What's up YouTube? My name is RJ and this is the Gen Z Investor channel. Today I'm going to be talking about why I do not pick individual stocks when investing in the stock market. So first of all, I am an efficient market theorist. So basically what this means is that I believe that it is very difficult to consistently achieve alpha in the stock market. Additionally, I think that stock price movements are essentially almost perfectly random. So I do not believe that any technical or even fundamental analysis will make you more money in the stock market. Starting with technical analysis, I do not think technical analysis makes any logical sense, and there's no academic research or backtesting research that shows that technical analysis will consistently make you more money in the stock market. Again, just logically looking at a chart, a picture, should not be able to tell you what's going to happen in the future. So all these gurus who sell courses that say you can look at the RSI or look at the MACD and say that it's oversold and you can buy there and then sell when it's overbought makes no logical sense. It is essentially like fortune telling, okay? We all know that fortune telling is BS. You can't look at someone's palm and tell them who they're gonna marry or what their career is. We all know that stuff is complete garbage and it's a complete scam. But when it comes to the stock market, apparently people think that this stuff works. For whatever reason, they are profitable on a few trades and they think that it is a statistical way of making more money. However, this is not the case. Additionally, there is a huge conflict of interest in the finance community from both the gurus who are selling courses and making money off people who don't know any better. Also, the brokers are benefiting from these day traders actively trading on their platforms and they're collecting a bunch of commissions. But the reality is you're not going to become profitable from these courses or through day trading in the equities market. There is absolutely no concrete evidence that technical analysis works. And somehow there is people on YouTube peddling this complete scam, okay? Additionally, I believe that fundamental analysis is pretty much BS. Okay, it is so difficult to price stocks because there is so many variables that go into a stock price. So if you think that you can look at a PE ratio or earnings per share or any other type of ratio, or look at management teams and somehow put a number to the quality of the management team, it makes absolutely no sense. And prices pretty much reflect all public information, in my opinion. And the idea that you are smarter than the markets is not a statistical likely outcome. And the main reason for this is that we have cognitive biases. So one example would be we have overconfidence biases. So one of the classic examples is if you sample a given pool of people, let's say 1,000 people, and you ask them, are they better than average drivers? You will get 85% of the people saying that they are better than average drivers. However, that is statistically not possible because it should be 50-50 if it's a random sample. But we are led to believe that we are essentially smarter than everyone else, when in reality we are not, okay? So these overconfidence biases kind of are the reason why I believe that people try to day trade or do any type of swing trades, because we're led to believe that we are smarter than anyone else, when in reality there's always going to be a winner and a loser in a trade, and 40% of the time or 45% of the time you're going to have a winner, but that's not because of any skill or any intelligence or any knowledge or any work ethic that you put into making a trade. So what these people are doing is they're basically saying that there is an arbitrage opportunity. However, I do not believe that that is the case. So let me kind of go through an example to maybe help you understand why I don't believe swing trading or day trading works. Because let's say you go to the store, right? And you buy milk for $3. And then you go and sell it on the street corner for $4. Now, that shouldn't happen because you are not adding any value to that product. And any rational person would go to the store and buy the milk for $3, yet these swing traders are doing they're peddling the exact same kind of logic of you can buy low and sell high, but in reality there should be basically one price for any given good. The stock market is no different because essentially you are buying and selling the same company if you're buying and selling stock. So there's no differentiating between high and low because you can buy and sell essentially just pennies wide from each other. So every stock in the stock market should be pretty close to perfectly priced. And there's no statistical way of knowing when a stock is expensive and when it's cheap. Also, I want to point out the opportunity cost of investing or picking stocks. So let's say that you could achieve 2 or 3% alpha by picking individual stocks. Unless you have millions of dollars, it is literally not worth your time because that extra 2 to 3% isn't going to make a difference in your returns for the time that you're spending on all this stock research. Additionally, there's no way to prove that your knowledge or your skill set led to you making alpha in the stock market. So you have no idea what kind of led to your success. So it's very difficult to basically assert causation on two things that are correlated. So if you're successful and achieve alpha in the stock market, you have no idea what actually caused that alpha, in my opinion, because just because it's correlated, you are correlated with the alpha per se, it doesn't mean that you know what actually caused that alpha. And it could be variables that are out of your control that you had no factor in playing. So with a large enough sample size, say 1 million people, you're gonna get a few people on the tail end of the distribution that are essentially achieve alpha, but that does not mean that their work ethic or knowledge or discipline made them more money, okay? They are just a statistic outlier. Furthermore, 99.9% of finance videos on YouTube will not lead you to make more money on the stock market. Unfortunately, a lot of it is just a waste of time, in my personal opinion, because they're not giving you any edge to making more money on the stock market. Now, they can discuss it and you can think that you're going to make more money on the stock market, but there's no proven way to actually know when a stock is cheap and when it's expensive and put dollar values on certain aspects that are non-quantitative, such as, again, management team. It is also worth pointing out that I think a lot of these more long-term investors on YouTube don't even understand beta. So what these kind of YouTubers will do is say,
hey, the market was up 10% and I was up 20% this year, so I achieved alpha on the stock market and I'm a good investor and you should buy my fundamental analysis course to help you make more money on the stock market.
The problem with this is that their beta of their portfolio is unknown. What beta does is, or what beta is rather, is your exposure to systematic risk. So systematic risk is just the risk of the overall general market conditions, such as interest rates and other economic data. So if you have a beta of your portfolio of 2 and you double the stock returns of the S&P 500, it's not that you achieved alpha in the stock market, it's that you took on more systematic risk. and you, in that scenario, were rewarded for it. But if the market were to have a downturn, you would actually lose more money. So these long-term investors will claim that they made alpha on the stock market, or that they have a good investment strategy by using fundamental analysis, but they're actually not achieving alpha. Or if they are, it's very, very small, and it's not even worth your time to try to arbitrage those kind of inefficiencies, small inefficiencies that are possibly in the market that you have no way of actually quantifying those inefficiencies. So in summarization, I do not believe in technical or fundamental analysis. I do not think any of those strategies will actually help you make more money in the stock market. I myself am a big fan of selling option premium. I think that that is the only statistical way of making alpha in the stock market. And if you enjoyed this video, please give it a like, comment your questions down below. And my name is RJ. This is the Gen Z Investor channel, and I hope you have a wonderful rest of your day, and peace out.